Hey everyone, just a quick sound check before we get started. Crazy start to October. Let me know if there's any sound issues. Okay, sound seems to be good on my side. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative of future performance. Alright, for those wondering where's my face, we are going to go ahead without the camera. There was a little bit of a lag on Monday when we did our webinars, so right now I'm not at my usual spot, so just for the sake of having a smooth session, I've turned off the camera, but hey, the content is probably more important than anything else. Okay, sounds clear. Chart should be coming out okay. It shouldn't be that there shouldn't be any lags or anything like that. Okay, so I've got a request already for oil. Can I have the range for oil XCI this week? And there is an OPEC meeting that started yesterday, all day today. There's the issue of a supply output reduction, but we haven't had anything else at this point in time. So just to give you the range for oil, this week we are still looking at a resistance at 87, a little bit of an intermediate support at about around 85, 86 or 85, 85, I'm sorry. A little bit of support at 85, so 87, 85, and then 83 for oil. That's the current range. In terms of whether or not oil can actually go further, there is a potential for this one to actually go towards 90 and 92, but there needs to be a daily close above 87. So we are at around 87 at this point in time. So for this week, is there a potential for this one to go towards 90 level and 92? There is a little bit of a potential for that movement, but do keep in mind right now we are actually around 78.6% on the daily as well for oil. This is going to be the case with the pound USD as well. But anyway, in terms of an intraday look on oil, that's kind of within a range. So if you're trading based on the early time frame, you do want to see a price maintain the position above 87 for oil at this on the early time frame. We're not seeing that. We just have a little bit of a rejection at around 87. In terms of support, it will come in at around 86, but ultimately we, for oil, we kind of need to give a little bit of a room for oil. So you do have a little bit of a support around, it is around 86 if you take the general range on oil. This for the hourly time frame. Let me zoom in a little bit. Okay, so we're dealing with 86 and 87. Price is somewhere in between. So in terms of how you want to trade oil today, I would say, a break below 86, then we can go for 85, 84, 83. Those are your options. If it does break above 87, then you do have your options towards 88, 89, and 90. So this is somewhere in between. In terms of the momentum, at least on the intraday scale, we are looking at a potential upward movement for oil. This is actually going to translate to pound USD and the euro USD. So it is a little bit confusing because if we go by technicals, then the current intraday movement is actually open for further gains. Fundamentally, it is not stable. We talk about this on Monday, but for those that just joined in on Wednesday, between now and 13th and the 14th of October, you need to pay close attention to the 13th of October, because that's when the US CPI number comes out. 14th of October is when the Bank of England bond buying program actually ends. So yeah, between the two of them, I think those are going to be the key defining moments for October. That's obviously mid-October, so we do still have time, maybe like a week or so. But again, what I'm trying to say is between now and the 14th of October, I don't think it's a great time to kind of figure out your swing trades. I don't think this is a suitable time to be thinking about holding a positions that could go on for weeks or months. Okay, so we'll go by the hourly time frame, especially for today. We'll talk about gold, yes. So let's talk about the commodities first. So we got oil, that's covered. Right now, if you're trading oil intraday, if you're waiting for that OPEC decisions, then look between the range of 86 and 87 for XTI. Any sustained close above 87, then you can go for the 88, 89, and 90. In terms of the daily movement, I think we're still looking at the potential for further gains on the US oil. I'm just really concerned about where we are in terms of FIPS, because if we go by FIPS, then you do have that 78.6% exactly at 87. So you're looking at a little bit of resistance right now building up for oil, both on the hourly time frame and on the daily time frame. And so yeah, if it does close above 87 on the daily, then it actually opens up for opportunities towards potentially higher range on US oil. Definitely going to be looking at around 90 minimum. We do see a little bit of resistance around 92, and then if you take a look at where the 127.2% is, if it does become an extension, then it is at around 94. Okay, and that's still okay. That's still within reason. It's not going to really change the overall trend for oil, because technically if you really want to see a little bit of a reversal for oil, you will actually need a close on the daily above 98, which is the 30th of August high before it actually fell down. Okay, so still a lot of room. I don't think oil is actually a bad trade to think of, because if we take a look at the current momentum, any sustained close above 87, then it really opens up for further opportunities on oil. Not really going to be looking for a short right now, but just in case, if there is a break below 86, then you actually do have a few support. We obviously have 85 and then 83 for support in terms of oil. Okay, but yeah, position traders, if you're thinking of going long on oil, you don't really, no, I mean, if you go by an intraday scale, if you go through the trades on the hourly time frame, then don't have your stop losses too far, slightly below 86 or below 85. I think that's more than enough for oil in terms of an intraday trade. But if you're looking for position trades on the break above 87, if you're going for that 90 level, 94, then yeah, you need to give a lot of room for this one. You definitely want to have your stop losses below 83 for oil if you're thinking of position trading. All right, next up is gold. We'll cover the commodities first. Okay, gold. Let's have a look at gold. So if we go by the daily, a lot of these are actually kind of stuck at around 78.6%. So we saw that price closes about 78.6% yesterday. Now it's actually back down below. In terms of resistance, obviously, if we drag out the range here, right, between 1695 to about 1725, 1728. And if I zoom out a little bit, you'll see that this range has been there for a long period of time. It goes way back. I can zoom out a little bit, and it goes really way back. But if you want to go by recent key support and resistances, this was the key support in terms of range for the July movement. And then on August, right now, if you flip it, then this is the current range in terms of the range itself being tested as a resistance. Daily does indicate there's some leftover momentum, but if we take a look at where the rejection is around 1725, it doesn't really push any higher. In terms of how far it can go this week, I think we're still looking at a potential towards 1750. But right now it is at resistance 2. It's failing at resistance 2. It's also failing at 78.6%. So if you guys want to trade gold, I would say make sure it gets out of the current range. I don't really want to be touching gold anywhere between 1695 to about 1728. I don't think it is quite stable if you are really looking for more of a position trade on gold. If you zoom in on the hourly time frame, things change up a little bit. Let me just hide the pivots. Okay, so gold on the hourly time frame, just like the Aussie, not the Aussie USD, just like the Euro USD and the Pound USD, in the short term, it is actually above the Ishimoku cloud. We could be looking for a potential support to come in at around 1695. The key here is not to go really wild in terms of how you want to target gold. We do have that strong support at 1695. So I wouldn't want to go short gold at this point in time. I'm much more inclined to prefer a long, but I don't like that idea either, because I'm not in. If you're thinking this is a position that you can hold for a long period of time, I don't think that's a great idea. If you look at it just from an intraday perspective, or maybe within the week kind of perspective, then we are looking at a little bit of support coming in around 1695, 1700. So if you are planning to trade gold, you can go long once the momentum turns around on the hourly time frame, and only on the hourly time frame, and make sure that price never actually close below 1695. If there's no hourly close below 1695, then that would be the point where you can look at the potential for gold to at least trade within the range up to 1725. You could aim for more, potentially towards 1740, 1750, but do keep in mind, if you guys been following how the market has been going around 1740, 1750, that was a previous support level. So if you really need to go on a trade for gold, then I much prefer to have a long position with a stop loss not more than 1690. Okay, I think 1690 should be kind of the limit on how far you want to go for a stop loss. You can go for 1725 just to be safe, but hey, if you think that the momentum is there and price is breaking quickly above 1720, then you do have your options towards 1740 and 1750. I much prefer this scenario, okay, but initial target I would just be looking around 1725. Stop loss, you're looking at around 16 to 17 bucks, and potential gain you are looking at around $21 at around 1725. If price do pick up a little bit quicker, then you can go for that 1740 or 1750, but I really wouldn't want to put anything above 1750 at this point in time. So if you want my thought on this one, then I much prefer a long on an intraday scale if and when price doesn't go below 1695 on the hourly time frame and the momentum turns up. Okay, So if we have a shift in the momentum, I'm using stochastics. You can use RSI if you want to, but in terms of stochastics, I think I much prefer that at this point in time, because I can look at the fast stochastics and the slow stochastics and see if there's any crossovers. So it's not all that gloomy for gold yet. I think there's still some leftovers, but just make sure that price doesn't close below 1695 on the early time frame. If it does close below 1695 on the early time frame, then I would actually scrap the whole plan of going long on gold. Okay, so that's gold. A lot of questions on S&P. We haven't talked about pound USD. We just took a look at oil. We just took a look at gold. So those coming in late, that's completely fine. We haven't taken a look at Euro USD, the pound USD, or any currencies at all. Are you seeing the resistance trend line on the 4-hourly time frame on gold? Let me go through the 4-hourly time frame. There is no resistance trend line if we go by the 4-hourly time frame. It's actually a little bit of a flat resistance. Again, that would come in around 1735. That's where the 100% is. If we go by trend line, then it will actually be this one. Sorry, let me just get rid of that. So we are actually quite done with this one. We are actually way beyond that resistance trend line if you're looking at that. But there's no trend line, resistance trend line that's really capping the gold at this point in time, except that, you know, that resistance from 1735 to 1740, which was the high on the 12th of September 2022. So again, I don't like the idea of going long gold, especially with as long as the FOMC is hawkish, as long as the FOMC is going to continue to hike rates, then I just don't see the point of going long gold. Maybe, you know, if you look by the 4-hourly time frame, then you are potentially looking for more of a position trade. The one that I just discussed, it's going to be really limited to trading within the range, but I wouldn't want to go for a position trade on gold. Yeah, I just don't like it. You know, if you take a look at the overall trend on gold here, it remains to the downside. We haven't seen a new high, a higher high at this point in time. We continue to create a lower low. So the overall trend remains to the downside, and I would say, you know, we are looking at a little bit of a failure around 78.6% or maybe even 100%. It has exceeded the retracement. That's probably why I say, you know, if you're looking at a shorter term trade, then that's completely okay. But I mean, if you're looking for a position trade, I wouldn't want to go long gold. Gold has never been a thing for me, especially during the past 1.5 years. I'm just never interested in gold. Okay. So yeah, that resistance trend line on the 4-hourly time frame on gold doesn't exist. We do have a horizontal resistance that's at 1735. So if you round it up, it'll be at around 1735 to 1740 for gold. How about S&P? Okay, here's the thing with the overall market at this point in time. I would say enjoy it while it lasts. I think it's a little bit too early to be happy about the current condition. As I said on Monday, a lot of you probably missed that Monday session, but it's not going to be smooth sailing from now until the 14th of October. Whatever you see, whatever bounce you saw on the market last week, short-term traders are saying, hey, you know, it is an uptrend, but I mean, position traders, swing traders, we're looking at this and say, like, you know what, that bounce that happened in the past 2 weeks, that was because there's an intervention from Bank of Japan. That was because there was an intervention by the Bank of England in terms of buying back the long-dated bonds. So I don't think it's really a stable recovery, um, especially not from the UK. And if we take a look at UK having financial stability issues, a lot of the banks are actually used to be positioned headquartered in the UK. So there's issues going around as well. This was actually asked on Monday what my thoughts are on Credit Suisse and Deutsche Bank. There were issues, there were rumors that their credit swaps are actually much worse than Lehman Brothers in terms of the amount, yeah, but in terms of the economy and the financial stability, I think it was a stress test that was done after Lehman Brothers. I think they're in a much better position. I think they're still liquid. I think the issue was, are they liquid? The stocks obviously got hammered the past 2 months. But again, whatever recovery that you saw in the past 2 weeks, I don't think that should be considered long-lasting at this point in time. So with the S&P 500, if you take a look at the hourly time frame, obviously we are looking at potential continuation to the upside for the S&P 500. This hasn't even retraced down to 23.6%. We are looking at a similar scenario with the US 30 and the Nasdaq. US 30 is a lot easier to look at. We've got 30,000 as a potential support. But for the S&P 500, if you take a look at the whole thing, intraday wise, unless the ADP comes up, which we just got the ADP number and we're not even looking at any fluctuations in the market at this point in time. Let me just double check the ADP. ADP comes in at 208,000. No one is really looking at ADP right now, but you got the NFP numbers on Friday. So ADP is slightly positive. In terms of the futures market that you're looking at, we do see that strong confidence in the market in terms of risk appetite, especially in the past week, mostly boosted by the Asian indices. All right. So I think Japan is going to be open next week. I believe Hong Kong is already open. So that should be a boost in terms of market confidence as well. And I know a couple of countries in Asia, like Indonesia, is going to scrap the whole COVID situation as no longer being a pandemic. So that could really boost some of the risk appetite in the market. But again, I'm not that confident in terms of looking at the whole 2 weeks recovery that we have seen as something really long lasting. But if you're looking for an intraday possibility or probability on the US futures, we are looking at a potential hidden bullish divergence that's being developed on the S&P 500, as long as price maintains a position above 23.6% or even 38.2%. Hardline it, we are looking at a potential support between 3,700 to 3,725 on the S&P 500. As long as this range exists, not really too concerned of a potential drop in the market. So we do see that. Well, I do see that potential. If market pulls back, we might find a little bit of support around 3,700 for the S&P 500. For the US 30, we are looking at that level right now. It is around 30,000. So this one has exceeded 161.8%. We are looking at a market that has created an extension. If we go by the latest FIPS, again, we're not looking at that 23.6% retracement as of yet. So what's likely going to happen is that price could bounce back up around 30,000, but it's likely going to be limited in terms of potential range, because let's say market bounces off from 23.6%, then we're looking at a potential extension towards 30,500, 30,600. So I would say this is okay for an intraday trade. If you're looking to trade the US equities, the US 30, I don't think it's time for a really strong rally, especially not in the equity market, until probably late October. So either this comes in early, or I don't know. I don't think it's time yet, especially as the US market is still waiting for that US CPI number on the 13th of October. So I guess post 13th of October, then there's a little bit more stability in the market. But if you're looking for an intraday trade, I much prefer to go for a potential long. It's just that it's not quite time yet for that long trade. It's not quite time yet to buy in on the US 30. Maybe it is in the next 3-4 hours, okay, or maybe during the ISM numbers for the US, but I'm just not seeing it right now. But the potential is, I would much prefer to go for a buy in the US 30 once the momentum turns around. If we go by the technicals on whatever it is that we're looking at, okay, ever since the beginning of October, we are looking at a potential of a little bit of a pullback. The market's currently doing a little bit of a pullback. I just don't know how far this pullback is going to be. It could be a quick drop towards 38.2 and potentially even 50%. And it's still going to be okay to go long. So if you go long right now, and this is actually going to apply to the Euro USD and the Pound USD as well. We'll take a look at that in a minute. If you are to go long right now, I think it's a little bit too early, because in terms of stop losses, you need to give room for the market to correct towards 50%. So what's that going to say? You can probably go for 30,500. That's going to give you about 1-to-1 risk reward ratio, but you're looking at around 500 points of stop loss for the US 30 and potential 500 points gain as well. I would prefer to wait for the stochastics to turn around. At least I know there's a little bit of a shift in the momentum. Then we can go by whatever low the market has created at this point in time. Your stop losses could be really, really small. It could be just slightly below 30,000. Okay, that's going to give you a great risk to reward ratio on this trade. I would say if you're planning to trade this week, you might get a trade today, but just don't rush it. That's all I'm trying to say. If you're planning to go in, see if the market go towards 31,000, then you need to give room for a potential 50% correction on whatever it is doing right now. Okay. Right. Next up, let's go to currencies. Let's talk about Pound USD. So here's Pound USD, very similar situation with gold. Yeah, we are looking at price that goes beyond 78.6% and then comes back down. So there was a discussion about Pound USD in terms of the FIBs from last week's Friday webinar on FIBs. So if you want to go and check out what's going on, I haven't switched the FIBs or anything like that because we don't have point C. We didn't have a 23.6% drop to confirm a point C. In terms of how far the point C can go, it could go all the way up to 1.14, and that's basically what the current market is right now. It is tough to break above that 1.14 on Pound USD. There's actually a live engagement on the Liz Truss. I think she's out doing a conference or something for her party, just to give back confidence in the market. There was a little bit of a U-turn in terms of their fiscal policy. It's not really a U-turn. They haven't actually finalized it for the mini budget. I think they just removed the the tax cut for the upper bracket, but it doesn't really change anything else. They're still looking at a potential borrowing of about 45 billion pounds sterling. That's around 52 billion US. Okay, anyway, pound USD right now, intraday wise, we are looking at that potential hidden bullish divergence as long as price doesn't go below 1.13. Okay, so you do have a little bit of a visible support here for pound USD. What I'm trying to say is, as a position trader, so I'm not going to be doing anything. But if you're looking for an intraday trade on this one, as long as it doesn't close below 1.13 on the hourly time frame, then the potential is that this could still go up even higher, maybe back towards 1.15. So that's kind of the range that you have on pound USD. So don't go crazy on it. And go for like 1.2 or anything like that. We're just not seeing that. But if you are picking this up, as long as it's above 1.13, you definitely want to have your stop losses maybe around 1.12. Then you can go for that 1.15 level if you want to. But just make sure that it doesn't close below 1.13 on the early time frame. Okay. Any bounces right now, you'll probably pick it up if you use a momentum indicator or an oscillator on the hourly time frame. You should be able to pick it up when the market turns around. Again, in terms of potential correction intraday wise, I think this is quite done. So as long as there's no hourly close below 1.13, much prefer for a short-term trade on the bounce of 1.13, having a stop losses, maybe at 1.1250. I really want to give it a little bit more room, so you have it up to 1.12, but don't have your stop losses below 1.12. I think that's just a huge risk of that being taken out. Okay, so risk reward ratio looks good, and as long as you don't translate this as a long-term trade, I think it's okay if we take a look at the intraday movement. As long as it doesn't close below 1.13 on the hourly time frame, looks like it's good to go towards 1.15 on the pound USD. All right, let me just go through the chat. We didn't have any issues there. Everything is going good here. Pound USD was discussed as being bearish. It is still bearish. So if we take a look, I think this was discussed on Friday as an example for FIPS. So if you missed out on what I say, go back to Friday's session. There was something that we were waiting for on Friday. If there was a daily close below that 23.6% of the potential point C, then yeah. Again, if you take a look at the whole thing, it is still bearish. We're not really looking at a new high. For it to not be bearish, it actually needs to close above 1.17 on the daily time frame. We're still at around 1.14. So as I said, I don't like the idea of you guys holding a long position for a long period of time on pound USD. I think that's a lot of risk. But if you're doing it on an intraday scale, then that's the range that we have. Okay. Yeah, I was about to long Euro USD. So let me go through Euro USD. We are looking at a very similar situation with the Euro USD. So we know what it is on the daily time frames, but just in case you guys missed out on the outlook and stuff like that, look, we are looking at a very similar situation with the pound USD. So this is where my doubt is. Okay, if you take a look at gold, if you take a look at pound USD, if you take a look at Euro USD on the daily, it actually surpassed 78.6% yesterday. But today, if we take a look at what it is doing today, it actually came back down below 78.6%. I wouldn't say there's actually going to be a rejection. That's why I say there's a potential for gold to continue to push up a little bit higher. There's a potential for pound USD to push up a little bit higher. And we are looking at the potential for the Euro USD to actually push up a little bit higher. So for Euro USD, if you take a look at the momentum here on the hourly time frame, it is actually going to be forming a hidden bullish divergence. Is it a valid hidden bullish divergence? Technically, yes, because we do see a little bit of an uptrend going on in the Euro USD. That was the 2 weeks recovery that we talked about on the Euro USD. So we are looking at that. We do have resistance at parity. Okay, so for Euro USD, the range is actually going to be a little bit easier. I think on Monday we were still looking at 98, 98.50 as a potential resistance. Obviously, we broke above that. If we take a look at the intraday support that we have on the Euro USD, is actually going to be 0.99. Okay, so if you take a look at this, and if we take a look at this and say, you know what, if price doesn't actually close below 98.75, then we are looking at a potential to jump in for a quick short trade towards parity. Could it go to what was that? 1005, was it? 1.005. it's what, 5 pips above parity. I would just go for that parity level. But if we take a look at this is probably a good example from the fib that we talked about, okay, on Friday. So we have this fib on the hourly time frame. We have 38.2% of a correction. So technically, it is a normal retracement in the market. If it doesn't close below 99 cents, it actually closes above 99.25, then I think this is actually a great short-term intraday trade for Euro USD, right? Make sure it doesn't close below 99 cents. You can have your stop loss at 99 cents, maybe a little bit lower, maybe around 98.90. In terms of target level, I would say, there's a potential for this one to actually come back to test parity again. Could it go a little bit higher? Maybe, yeah, an extra 25 pips, but is it worth it? It really depends. Needs to see how strong the momentum is. But right now, on an intraday scale, yes, on the pound USD, the Euro USD, and gold, all of which borderlines the 78.6% on the daily. On the hourly time frame, from a technical perspective, I see that potential long, right? I see the potential for a market that's refusing to come back down for a correction. So we'll see what happens here. Technically on the Euro USD, we just had a test on parity. We might be able to come back above that, to test that parity level again. But one requirement is that it doesn't close below 99 cents, and there should be an hourly close above 99.25. If that's the case, then you are looking at this potential scenario here. You could be looking at a small risk in the market. We are talking about risk that's less than 50 pips, which is something really unique in the past 2 weeks. We haven't been able to pick that up. So there could be a potential for this one, if it does close above 99.25, to actually go in long and target parity again for the Euro USD. Could it go higher towards 1.0050? It could, but I would aim for that 127.2% extension first. That's at 1.0025. If RSM tonight is soft, will it make risk run on again? Do you see it like that? I would say tonight's number is actually the services PMI, right? We already have the manufacturing PMI numbers. Let me just go through that. The manufacturing PMI was actually 2 points lower than expected. Yeah, it came in at 50.9. The expectation was 52.8. 52.5 actually. So the RSM numbers tonight is actually the services PMI. The key number is obviously the manufacturing PMI numbers. How bad is it going to be? Previous number of 56.9, expectation was 56. If it still comes in at 55, I think that's okay. Anything lower than 55, I really wouldn't think that the SM services numbers is actually going to have a lot of impact, especially if think about it, we have the NFP numbers and the unemployment numbers coming up from the US on Friday. I think that's a little bit more important. Will it have an impact, a negative impact in the market? At this point in time, I don't think so. Whatever negative impact that we have in the market, it's probably leaning more towards the manufacturing numbers, and that was already out on Monday. It was lower, but what we saw on the equity market, it just continued to push up higher. If the number comes in negative for the US might get a little bit weaker. So that's kind of in line with what we saw on the Euro USD and the Pound USD here. You got a short position on Pound USD and almost hitting a take profit. Okay, I'm going to move my stop loss. Okay, that's completely fine. Dollar CAD 1 hour time frame. Potential hidden bearish divergence. If price closes below 1.36, can it go down further? Why am I looking at dollar China? Okay, so dollar CAD again. If you look at how far this retracement has gone, it's very close to 78.6. So if it does turns around and price closes below 1.36, can it go down further? We are looking at the potential for another retest of 1.35. So yes, we are looking at potential hidden bearish divergence on the US base pairs. So that's actually kind of in line with the dollar yen as well. The overall look on this is kind of in reverse of the Euro USD and the Pound USD. So we are looking at the potential weakening of the US dollar, at least intraday. Now, I don't really want to say it like, oh yeah, you know what, US is really weak right now. I don't think so. I'm just really thinking that whatever the market has done in the past 2 weeks, it's not really based on a normal market condition. It's really based on interventions. But intraday wise, yeah. I would wait for the stochastics to confirm it. If price goes back down below 1.36, does that give you a new FIPS? Because we actually haven't confirmed this FIP yet, yeah? So if you're looking at that, 1.3595. So yeah, if it does go below 1.3595, then yes, we could potentially be looking at for the continuation to the downside, but not really surpassing 1.35. So if you want to go for a potential target, go for that 1.35. In terms of stop losses, make sure it's still above this high on the 4th of October. So let me just highlight that. That's where you want your stop losses to be. Risk reward ratio seems to be great. We're still looking at quite an okay risk. Initial risk is around 65 pips. Once we have that close below 1.36, you can then adjust it a little bit lower. But if you're thinking of going short right now, it's a little bit too early to go in short on the dollar CAD. Okay, so use this as a guideline. Just make sure that you have that on your FIPS. This is 4th of October to, within 4th of October, that's the current swing. So we'll see what happens here. As I said, all of this are really, if you're thinking of going in, long on those Euro USD, on the Pound USD, it is too early. We're looking at a possibility that, we could see that continuation on whatever trend it is showing on the hourly time frame. But it doesn't really apply if you are position traders, okay? All right. GBP USD daily, if momentum turned down, does it count as a divergence? Boom. Technically, it should. It's not really a full cycle or anything like that. That's a tough one. Wouldn't want to classify it as a really strong divergence, but yes, it will count as a divergence. Look, the drop from A to B, it's not a normal drop. It's it really broke the technical sides of things for the pound USD. But yeah, do I see it as a potential hidden bearish divergence? Yeah, as long as it doesn't go beyond A, it will still apply. And this is the reason why I'm kind of a little bit hesitating on saying that, hey, the hourly looks great and stuff like that, because it's kind of borderlining the 78.6%. We have that projected resistance at 1.14. You take a look at the movement yesterday, it does surpass that 1.14 level, but whatever the market is doing right now, it could be taken in as a potential rejection at 1.14. So with pound USD, I would say, keep that 1.13. If there's no hourly close below 1.13, then great. You can go for that 1.14, 1.15. That's a really great option. But as I said, the momentum hasn't changed yet. I'm just not really confident of this long. Fundamentally, I don't think it's there. Whatever the recovery has done in the past 2 weeks, I don't think it's on the context of a normal market condition. Okay, but hey, we still have to look for trades, right? It's not like we can just say, hey, stay away for 2 weeks. There's going to be short-term traders that's going to be looking at the market, looking for a potential opportunity in the market. If it stays above 1.13, then yeah, I think it is a great opportunity, because you could have a small stop loss and aim for that potential move higher. So the daily hasn't confirmed anything. It's really borderlining, especially that we have the NFP numbers on Friday. So whatever the market gives you, just treat it as a short-term scenario. And I say enjoy it while it lasts. That's as simple as it is. I would go with the flow, and if we go by the hourly time frame, then there's no denying that the past 2 weeks have given us a little bit of a short-term recovery. Are we borderlining on that short-term recovery? We could, because if the daily closes below 1.13, that would confirm a 78.6% rejection on the pound USD. So that's what I'm trying to say. If you are thinking of jumping on a trade right this very moment, I think it is a little bit risky. I need the momentum to turn around, because if we go by stochastics, it's dropping below 20. There is a potential that it could actually be it could create a downward pressure on the pound USD, on the euro USD, on gold. Simple as that. But between going long or going short, I would look at what the market is going to do today. For the pound USD, is actually pretty simple. If it doesn't close below 1.13, then yeah, I'll probably buy in once the momentum turns around. But if there's a close below 1.13, then I would say, what, I don't think it's quite time yet, because it's borderlining on stochastics on the Ichimoku cloud as well. This could easily transition back below the Ichimoku cloud. So that would actually end whatever run it has from the 28th of September. Okay, so think of the risks involved trading pre-NFP at this point in time. We did talk about gold, so let me just recap gold a little bit. By the way, requests, if you do have any, we've got about 10 minutes to go. So any requests, type it in now, or you are not going to get that view until next week, right? By the way, we have Elliott Wave on Friday. So you guys that heard of Elliott Wave before, want to know more about Elliott Wave, you know, what are the potential cycles and stuff like that. It's not just 1, 2, 3, 4, 5 ABC. It's obviously more than that. So we're going to talk about that on Friday. All right, for gold, let me just get my gold here. We did talk about gold, okay? So here we go. The way I look at gold is that there is still, I wouldn't say it's going to be a confirmed move towards 1750 at this point in time, but what I'm trying to say is as long as it doesn't close below 1695, so pretty much the same scenario with the pound USD just now, right? Pound USD we have 1.13 in gold we have 1695 as potential support. If there's no close below 1695, then you know we could actually see price comes back up towards 1725, 1730. Again, not something for long term. Don't think that you can go in long on gold and then hoping that it's going to go to 1800 or anything like that. It's not going to be that easy. It's not going to be that easy even breaking that 1740 level. Okay. So right now this is going to be about the same scenario. We do have that resistance coming in about 1734. That was the previous high before the drop lower. The current move to the downside is actually a retest of, let me just highlight that. This was a support. And then this was a support as well. So right now the market is actually testing this as a potential resistance. If you're not seeing what I'm looking at, let me just draw it for you. Okay. So this, where we are right now, it's unknown, right? This was actually the previous support range. So the market could be doing a retest as long as it's actually within that 1725, 1730 range. So in terms of long-term direction, how far can it go and stuff like that, it's a little bit unclear for gold. But if you are looking for a potential intraday trade, then yeah, as long as it doesn't close below 1695, and you might want to be pick it up closer to 1695, but make sure your stop losses are around 1690, 1680. Don't go any lower than that. In terms of target range, you can go for that 1725, 1730. I wouldn't really want to go for that 1750 because it's not going to be a strong probability at this point in time. There's a lot of risk going long gold, so keep that in mind. I've actually stayed away from gold in the past 1.5 years. Okay, never been a thing. Okay. Alright, we got a request for Euro AUD. US oil managed to break trendline resistance at the 4-hourly time frame. Should we wait for the result of the OPEC meeting? We did talk about oil, right? Just at the very beginning of this. So yeah, oil, I don't even think you need to even go to the 4-hourly time frame. Why? One thing for oil, don't start looking for long-term trades on oil yet. I don't think it's quite time yet. So I would stick with a small range, but you have it a little bit easy tonight. We got 87 as the resistance, we got 86 as the support. If there's a sustained hourly close above 87, then you want to go for 88, 89, 90, up to 92. Okay? If it does break to the downside below 86, then you've got your 85, 84, up to 83. So as it is, it's kind of range bound. Waiting for a breakout on US oil. Okay, request for Euro AUD. Could I have taking a look at Euro AUD right now. Really pushing it. I'm not really liking the whole run up on the euro at this point in time. If you go by the daily candles, it is a little bit messed up, right? So not really a great indication that the market is actually trending. In terms of Euro AUD on the hourly time frame, I think this one has done 127.2, but just let me check. Yeah, this one has done 127.2%. I wouldn't be looking for a new fib at this point in time. It might be a little bit deceiving if you go buy a new fib, because then on the hourly time frame you will be looking at this fib. All right, we already have a couple of breaks below 23.6%. The way I would look at Euro AUD, I would treat it more as a potential range breakout on the Euro AUD. So that's probably the best way to look at the Euro AUD. In terms of range, it's not really huge, right? It's what? It's about 100 pips. So yeah. Pretty stable at this point in time. If it does break below 1.53, so we can actually round it down. So you got a little bit of support coming in at 1.53. You got a little bit of resistance coming in about 1.54. You can round it down to 1.54. Okay, there we go. Make it a little bit simpler. If it does break below 1.53, you don't really want to target anything more than 1.5250. So if it does break that, then your stop loss is going to be there. Your target level is going to be about 1.5250. Not a really great risk reward ratio, but hey, we're talking about a potential breakout scenario. If it does break to the upside, then yeah, still have a little bit of room to go to the upside. We can go by. So here's the thing, because this fib is actually still valid, but at the same time we've got a small fib as well. But you go by whatever it is right now. If it doesn't break below 1.53, then you can still go long. Just make sure your stop losses are below 1.53. I can still go for that 127.2%. I think this is pretty okay. But yeah, I wouldn't use fib at this point in time. I would just wait for a potential breakout scenario. If you really want to be exact, then you want to have that on the 4th of October, low and high on the 4th of October. It will be in the same candle there. There's actually a transition between them. So yeah, that's the range for the Euro AUD. I would go for a breakout strategy. So it's really one-on-one, right, in terms of risk reward ratio. If it does break to the upside, then your stop losses are easily on the other side. Simple as that. Make sure you go for a 1-to-1 risk reward ratio. Then that would actually put you closer to 1.55. So I think this is ideal. But again, if it does break to the downside, then you got your flips for Euro AUD. Yeah, favoring for the upside, then today happened, Euro turn lower. Look, guys, let me just remind you. I've been trading for 20 years, right? And there are times in the market when I get a little bit uncomfortable. I think we had a great September. October is making me nervous. Partly because there was a lot of stuff going on in September, right? Stuff that were in our favor for a lot of us that doesn't go against the trend. But there was a little bit of a disruption. So let me bring everyone up to speed. Don't ignore whatever the whole financial stability that's going on in the world right now. Main focus is going to be on the UK's financial stability. There's a lot of concern about that because of the mini budget. The mini budget is actually, the proposition is actually for a borrowing of 45 billion sterling. That's a lot of money, right? That's just to maintain that mini budget. That's not even a medium-term fiscal policy, or that's not even a medium-term budget for the UK government. It's really called the mini budget because it targets the short-term end of things. But it has an impact on pension funds. It has a lot of impact on the treasury market. There's a lot of impact on the bond market. There's a lot of impact on the debt market. So from experience, it doesn't sit quite well with how I look at the market right now. Whatever technicals that's showing up, it's really making me uncomfortable. That short-term bull run or whatever you guys want to call it, the past 2 weeks, that return of risk in the market, that risk appetite that comes back, that was on the back of an intervention from Bank of Japan. That was on the back of an intervention from the Bank of England. So think about it, whatever the market does the past 2 weeks is not on a normal case scenario. It's not normal. We're looking at two major central banks that actually intervene in the market, right? One to protect the currency, one to protect the bond market from collapsing. If the bond market collapses in the UK, it has a lot of implication, and there's already rumors going around that Credit Suisse and Deutsche Bank as an investment bank is actually going to fail. For now, I think they're still okay. But if the situation in the UK gets worse, we're looking at a credit default swap coming back again. So that would put this back, to 2008, 2012. That's my concern. Okay, so I would say if you find a position and you got your targets for the day, go for that target. Just don't maintain it for a long period of time. There's a lot of instability in the market. At least Bank of England gave us a date. It's 14th of October. They're actually going to stop their intervention on the 14th of October. Bank of Japan doesn't give us a date. They just scare the market and kind of artificially cap the market at the dollar yen at 145. So there's a lot of risk if you trade the yen crosses. Okay, the intervention that they did was 2.8 trillion Japanese yen in one go. So that's a lot of money. That's a lot of risk. There's still an X factor China being away for this week. So yeah, I mean, look, for what it is, there's still North Korea shooting rockets over Japan, and then South Korea and the US shooting rockets back. I don't know what's going on, but all I can say is up until, at least from the information that we have from now until the 14th of October, there's still going to be a lot of instability in the market. That's all I can say. Okay. Alright guys, I think that's all the time we have for today. I'll see you guys for Elliott Wave on Friday. But yeah, good luck with your trades. Don't forget that on the day we do Elliott Waves, there's NFP coming up. So good luck with your trades, and I'll see you soon.